about taxes, and this one had at least one reward for perhaps a few lakh citizens who are paying tax, those paying between 2.5 and 5 lakh, those earning between 2.5 and 5 lakh will now be paying half the tax they were paying until last year. And that benefit, of course, is available at higher levels as well with a ceiling. So there is something for all of us, perhaps, in this budget. But what has this budget done to the tax regimen? To take us through all those finer details, we have some fine minds with us. My companion here today is Arun Giri, a former colleague and editor, Tax Sutra. Also joining us as in our guest panel is Naresh Makhijani of KPMG and Mr. Sudhir Kapadia of EY. Mr. Kapadia, first, congratulations to you. Before we came into this discussion, we had that big budget brainstorm when Mr. Kapadia was the only one who said that he expects that there will be no let-off on tax. It will not be 2.5 raised to 3 lakh, but the lowest category could be halved. I mean, it looks like he had a peep into the budget papers.
Absolutely.
That was just a wild guess, Lata. One of the few occasions when the wild guess proved true.
Well, I think the purpose is served that you don't reduce the number of taxpayers, so that's an honourable intention in a country like ours. But Arun, before we start off, your first observations. Is it a boring budget for a taxman? Is it an unchallenging budget for a taxman? They don't get to make money?
Compared to the last few years, I don't think either Sudhir bhai or Naresh are going to be burning the midnight oil today. For sure. How much ever they try to dissect the fine print, at some point they'll have to stop in the evening by 7. So I think they can go back home for dinner. But 4 or 5 big themes. I think there was an expectation among a lot of people that pursuant to demonetization and the big bang action on the tax front after that, there could be some revolutionary moves. So there is nothing revolutionary as far as the tax measures are concerned, which I think leads to a very important conclusion that the fiscal space or the tax collections that they were forecasting in the next 12-18 months did not give them much room for maneuvering. That's very clear. Number two, every year for the last several years, we are seeing some sort of new, some big new measures. Last year you had the equalization levy, a new tax. This year there was conjecture whether long-term capital gain tax on market transactions brought back, cash transaction tax, BCCT. To that extent, he's played safe. Number two. Number three, he said during his speech that he wants to expand the tax space, that he will use data analytics to do that, and he wants tax administration to be fair. I think that is the biggest worry. If you ask either Sudhir or Naresh, I think somewhere, you look at 8.5 lakh crore tax arrears last year. I saw the figures. This year, it's over 9 lakh crores tax arrears. I mean, the amount of tax money that is stuck in disputes, somehow, irrespective of what the governments are doing, they are just not able to bring down the tax disputes in India, and that ought to worry. And one final point before listening to Sudhir and Naresh is the government, with a lot of fanfare, appointed the Ishwar Committee to simplify the Income Tax Act, which has 288 sections and several hundred rules and provisions and explanation, and is a tax professional's delight and a taxpayer's nightmare. The first round of recommendations and report was implemented in a big way in the last year's budget. The second round of report was given 4-5 weeks back. It's not yet been released. It doesn't seem to have a lot of, I'm not sure, a lot may have been implemented. I think, therefore, the question that deserves to be asked is, where is the simplification of the Income Tax Act?
Okay, that question to you, Mr. Kapadia.
No. So on the last point, actually, there are at least 2 or 3 references to the Tax Simplification Committee's recommendations. So I think it has not been publicized as much, and thanks to demonetization and the whole debate was on a different level. But I wouldn't say that there is no attempt on simplification. I think the other point I must say before coming to the budget, in a way, I don't completely agree, Arun, with the analysis to say that litigation has not reduced. I can tell you there are 2 or 3 data points which are very important. One is, for the first time on transfer pricing, we have the de minimis test replaced with a very subjective criteria on risk, which has resulted in far lesser number of references going forward. So we'll see far less number of controversies. Complexity may be more, but number will be less, right? So that we will see. Also, the areas we have to remember, if you really go peel the onion, a majority of the areas you will find belong to an individual or a certain group of taxpayers. And we'll not get into the details of that on this show. But if you see, if you take out those, then the areas are not as much as they are made out to be. And I think the third and the most important point is the slew of circulars which have been issued by the CBDT, frankly, under the reign of the current, Revenue Secretary, is just unimaginable and unimaginably positive. Because on complex issues, you have got circulars saying this will be the tax position, which I think is unheard of. So some of these things may not be big bang and make headline news because it's not a corporate tax rate cut. But I think they are very substantial. So I just wanted to put that in perspective.
Speaking of CBDT circulars,
yeah.
of course, the big relief for the stock market itself was the clarification that famous December 21st CBDT circular on indirect transfers will not apply to FPI and certainly not to category 1 and 2 AIFs, that kind of funds. Naresh, your thoughts on that? And would you worry that category 3 has not been included?
So I think based on the speech and what I saw it's FPI category 1 and category 2 which are excluded.
He didn't say AIF?
And most important, other FDIs if they have suffered tax in the first leg of the transaction. So this is what is emerging from the speech and whatever finer points we have seen. So it is FPI category 1, category 2. The always intent, based on our conversations with the ministry, with CBDT, it was emerging that they will extend this benefit to category 1 and category 2 because they comprise or compose of the largest. So I think that's a very welcome move, very well appreciated by everyone.
Yep.
I think it will give boost to the investor confidence. And also to add what Sudhir said on the third point, I think the openness and the way the CBDT and the ministry have engaged with various key stakeholders is hats off to them. I think there is a sea change where today the implementers, the regulators are listening to you. Okay, they have sympathy, empathize. They may disagree with you, but at least there is an open communication which has been established. So I think it's a sea change. I would say I would compliment the administration and the current government in making this as transparent as possible.
I think there is no denial of the fact that you've had some 40 circulars issued in the last 12 months. But if you look at the, ultimately what matters is the implementation of the circulars at the ground level. And, I was talking to a few experts in the morning before the budget, tax professionals, and that is where the worry is, that litigation at the ground level is not coming down. But I think I want to pick up, Lata, we were talking about the interest deduction.
Yes.
The interest deduction capitalization, there is a thin capitalization rule that has come, and for the benefit of our viewers, what this means, Lata, is that if an entity makes a payment to non-residents outside, then and if it's a group entity, and I'm trying to simplify it, the interest deduction will be restricted to 30% of the profits or 30% of the EBITDA. Sudhir, if you could just explain that a little further.
So this is, part of the BEPS project of the OECD, the base erosion and profit shift recommendation, what is popularly called thin cap rules, where you don't want to encourage a company to over borrow with a view to get additional tax deduction. I think on this point, I personally think that's one part which is disappointing, and I'll tell you how. If you look at so-called large corporate taxpayers, by that I mean the 4%, who will not get the lower rate of 25%, but they probably contribute much more to the economy in terms of sheer weight and size and scale and turnover and everything. You have the normal rate of 30% plus surcharges. You have full dividend distribution tax, which for a profitable company translates into 42% if you declare all dividends as corporate rate. And then you have this interest deduction cap, which I'm not sure combined all of this together, it actually serves to further increase the tax base for that 4% minority of the large taxpayers. So I think in that sense, perhaps not good. But I must also mention in the same light, when you talk about a cut to 25%, mind you, from 35% cut for 96% of registered companies. So what he has done, the expectation was that we will now see, let us say, a 28% rate, which was the other thing which at least I had guesstimated. but across the board, because that's the policy roadmap. Instead of that, he has chosen to retain 30 for the large corporates, but reduce 25 in one go for the majority of MSMEs. So that's an interesting, choice of or combination of measures.
Okay, well, you will have to admit that that 4% of taxpayers actually account for 96% in terms of value.
Which is exactly what Lata Prashant was saying inside.
And that's the point I
my
was
sympathies
making.
are for the finance minister in that 96%, incidentally, practically none of them pay 30% or very few pay 30%. The average for them actually is working out to 25%. Finance minister's figures.
Blame them,
So
Lata,
we
for
have
that.
to take a break. And welcome back to our special segment, Budget and Taxes. This budget, of course, has given some relief to the smaller taxpayer from the 2.5 lakh to 5 lakh category, but has come back with a vengeance on the 50 lakh to 1 crore category. You pay 10% more surcharge, my dear.
No, not at
Arun.
all.
But perhaps the other significant addition in this budget, or path-breaking innovation in this budget, is that political funding has been sought to be made as digital and as transparent and legal as possible. Mr. Kapadia, do you think it's path-breaking?
Definitely it's path-breaking. See, there are two aspects. One is, at least I don't remember a finance minister or a government in parliament admitting two things. One is that there is a lot of political funding by ipso facto, is what he said, which is unaccounted for. To admit that in parliament, I think, is a first of its kind. And two is to admit also with facts and figures that we are a largely non-tax compliant country. Now, that's a big statement. It's as good as, it's as challenging as saying Swachh Bharat, because we are a dirty country. And I think you have to read that in the context of, these measures. Now, look at the political funding proposals. There are two aspects there. One is the recommendation of the EC, which is to say reduce the limit of 20,000 to 2,000 for cash donations. But there is one fine print which perhaps can be easily missed. He said with a smile, going forward, to continue the income tax exemption for the political party, you will have to fulfill all the conditions. The current law is more a guidance, the current income tax law. You have never heard of any major political party's income tax exemption being taken away. Even if you don't file the returns in time, even if you have probably failed to comply with some conditions. Now the law has been amended to say not only you fulfill these conditions, but your exemption, continuing your income tax exemption, is subject to fulfillment of those conditions, which I think is a very powerful move. The first time, as I said, the polity has sought to regulate themselves. So that has to be lauded. The second part is about not just political, but the fact that the other recommendation of the SIT, any payment over 3 lakhs, any payment, not just revenue, but even capital in nature, will be disallowed. So either as a revenue expenditure or capitalized expenditure, which I think is basically saying that we don't want you to deal in cash for high value transactions. Implementation is not going to be easy, but I think the fact that they have taken the bull by its horns has to be really commended.
Okay, well, bull by the horns, I wouldn't go that far. 2,000 rupees should also have been in check. There should be no cash payment. If you have a Beam app, that should be applicable
That's a point.
as an app
That's a good point
for
as well.
political
But
contributions
Lata, just
as well.
continuing on that theme, two things that stand out, and this is the larger theme. The finance minister kept talking about data analytics, kept talking about how many people are paying over so much tax, how many crore people or how many lakh people are paying below 10 lakh, above 50 lakhs, how many cars are being bought,
Absolutely.
how many people are going on overseas vacations. There's an unmistakable, not only a hint, but a clear signal that data analytics is going to be used
Absolutely.
in a big way to go after tax evaders. And he also made a
Absolutely.
telling comment that forget everything else about demonetization, but we have enough data of depositors now to compare with the taxpayer's profile.
Yeah.
So that is a big theme coming out of finance minister's
I think we are
speech.
getting the power minister in a jiffy, but Naresh, last thoughts.
I would just want to supplement this. Whilst the finance minister has talked about sources of funding, what about how the money is being spent. There is no reference to that. There is never a transparency how a political party is spending that money. So I will leave at that question mark for all of us to reflect on it.
For the
Because
next
there is
budget,
no-
Lata.
A beginning has been made, but there's
Yeah,
certainly
that I agree.
a long way to go in
That's
terms
right.
of
That's right.
cleaner money in politics.
That's right.
Naresh and Mr. Kapadia, thank you very much for joining us in this tax special, and of course our
My pleasure.
Tax Sutra editor as well. We take a break, but we will be listening to the Power Minister Piyush Goyal in a minute.
Thank you.